Happy Friday, traders. It is Friday morning, 8:02 a.m. Chicago time on the 29th of May, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Uh, we're light on news overnight. Very quiet action. Europe has sold off a little bit. But overall, the market's pretty steady. The dollar's flat. European May CPI data showing more evidence that the ECB's QE program is showing results. Greek situation remains a drag on sentiment. The Nikkei closed up for the 11th straight session and fresh 15-year highs at 7:30 this morning, 7:30 Chicago time. Q1 preliminary GDP annualized came out. Q on Q a little bit better than expected, negative 0.7% versus negative 0.9% contraction, showing a contraction there. Personal consumption came in at 1.8% versus 2%, and preliminary GDP price index came in at negative 0.1% in line. Looking ahead, we just got ISM Milwaukee. Actually, it's a tertiary number. May ISM Milwaukee came in at 47.7 versus 50, which is anything below 50 is contracting. Looking ahead at what's expected today at 8:45 a.m. Chicago time, 15 minutes after the cash open, we're looking for Chicago's PMI. The expectation is 53. The consensus is 51 to 55. This number is a subscription-based number, so expect it to come out a little bit early. Usually, we'll hear a number circulating at about 8:42 a.m. So be careful if you have a position into the number. And then at 9 o'clock Central, we have University of Michigan sentiment. 89.5 is what's expected. After that, you have your end of week energy, the ICRI weekly, as well as Baker Hughes ICRI weekly at 9:30, Baker Hughes at 12. Those aren't movers. As far as speakers, nothing that's ahead of us. ECB's Mersch has already spoken, and so has German Chancellor Merkel about an hour ago. And a reminder, today is first notice day for interest rates as well as metals. So you should be trading the next contract. If you're long on first notice, there's a possibility of getting delivered on those contracts. So heating oil and RBOB June 2015 futures expire today as well. Let's switch gears here and look at what we have done here, how things played out yesterday versus what was expected, what the plan was. Again, we always come in with a plan. We always follow the same routine and then let the market do what it's got to do. And then we just look for an edge and step in. So, real quick, again, always the same process. It's key to trading. Just follow the same process, follow the same habits. Overall, still in the large balance area. We keep extending this balance up as the market is trending up, but overall, still in this large balance area. We have tested the 95.50 key point of control below, which has shifted up to 2101.50 now. And we're aiming for the 2124 quarter above. So we've done a pullback and a test from the all-time highs of 2132 and a quarter, and we've recovered our on our pullback. On the 15-minute, here's how things shaped up. We basically were sideways into new all-time highs, continued to be sideways. We missed the all-time high retest by a tick up here, so we have somewhat of a weak high on the all-time high. Then we sold off and we sold through the 2110 minor point of control, short-term point of control, and pushed within 2 ticks of the 95.50, like I just mentioned. The next day took all of that back and took us back to the key price up top, which was 24 and a quarter. 24 and a quarter was tested to the tick on Wednesday before the market pulled back. Yesterday's plan, if you recall, if you were here for the Trader Bite, yesterday's key plan was to open in range in value and for a potential test up to 21.21, if you recall, and then the expectation is for a push down to 21.50 as a key price on the day. That is the next big acceptance area. And what the market did is it opened open auction in range, test, retest, could not quite get to the 21.21. It stopped 3 ticks ahead of it, and then we got the selling push down into the 1250. We actually traded quite a bit at the 1250. You can see here weak lows being put in, pushed, weak lows being put in again. A test of the mid, a very beautiful classic test of the mid here, almost to the tick, 21.16 quarter versus a mid of 16. And then we finally get the continuation move on this 8-point impulsive move down. Very structured performance here. Intermediate term early, but the rest of it is pretty much short-term traders in control. We retest the open later on once we make this range extension down through the IB low and complete this last impulsive move. We do test the open, and then we end up testing the low once again. This looks like a convoluted head and shoulder on a 2-tick Renko, but it's somewhat of an inverse head and shoulder, which broke on the upside. I actually did not predict that we would go neutral yesterday. Neutral meaning we take out the first hour's high and the first hour's low. So we took out the first hour's low here, and then neutral is the other side. And we did get neutral. That is generally neutral, especially neutral extreme like we had here. We closed right on the extreme. Generally speaks of a continuation in that direction. The overnight session has been interesting in that it came all the way back down to that 21.1250 and retested the IB low. Given that we basically closed so strong, but again, the markets continue to be nervous about Greece and a few other factors, despite the good news on CPI coming out of Europe. So here, this is where we were. We have a double distribution profile, not so pretty, but it's still a double distribution profile with the mid at 21.1650 representing the LVN, and that's where we're opening. So where we're opening today is a bit of a blur. It blurs the probabilities a little bit because what we have is two acceptance areas. These the HVN, or the point of control that was down here, which moved right on this bar right here, moved up. This point of control has 40,000. This point of control has, or it's not a point of control, it's a high volume node, HVN had 40,000. This has 45,000, just slightly more. And what we have is a two-prong, basically a two-prong acceptance price, both at 21.19 and 21.13 half. And we're basically in between them. We're not exactly in the middle. We're skewed a little more to the upper distribution. But overall, given the fact that we tested lower and have taken this, we've quickly taken this test back, and the fact that we ended up neutral extreme high, I have to go with the probability that 21.24 quarter is the likely next test area. So this morning, even though it's shaping up to be somewhat murky on the open as we're stuck in between two key acceptance areas. Um, Overall, we have the close above us, we have the point of control above us, but we do have a magnet below us at 2113.50. So hands off in the morning. I'm going to let the PMI, Chicago PMI number come out, and then I'm going to look for who's in control and then go with that, with the aim that if it does rotate down, it's likely to get tangled up in here. And as you can see here, the volume was formed by a lot of there's just a fair amount of volume here that traded in these areas, and so I expect it to get trapped in here. This, of course, does not take into account some news that might pop in at any given moment, changing things a little bit. But overall, if we do drop, I expect a test of 2119 eventually. If we push higher, I expect it to chop, and I expect a continuation to 2124 and a quarter, and that's my primary idea or primary hypothesis trade idea for the day. Secondary, we push up towards 2019, find that there is no acceptance, just like we've seen for the last couple of days on the NQ and so on. We push into prior acceptance areas. If we see that there's a swift rejection back to the open and the inability to get back up there, then I would be looking short towards 2113.50, chop, 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 and then chances are it'll continue lower very, very slowly. Remember, it's Friday, so there's no sense in committing, in large participants committing a lot into the market into a weekend. But overall, here's the night session. We went neutral, extreme yesterday, and then we opened and just basically sat sideways until the European Open. Europe opened right here, and we just basically sold off, and we've come all the way back up and are holding somewhere in the middle. The profile on the overnight is not telling me much. It's basically saying consensus across the board, very boxy profile. There's no clear shut off on the buyers. There's no clear shut off on the sellers for sure. Look at this thing, so blunt at the bottom, with no real kurtosis or belly to this curve. Basically, what that says is prices were considered value or favorable across the range. There was no real acceptance at any given price. Yes, we have a point of control, 2118 quarter, but this thing could shift around very easily. There's really no consensus here. So nothing to glean from the overnight session except that we were not able to hold on and we were not able to hold on to new highs. Now we ended up making new highs. Just as expected on a neutral extreme, the auction stopped at 315, and then on resumption, it continued to push higher. So it did its job, but overall, it's not giving us a clear indication. I would warn you that today is the type of day where you could experience some frustration. The antidote to a day like today is to just chill. Just chill. You have 2 hours in the morning until the European market closes, and then things slow down quite a bit. About 2.5 hours into the session, then you have the lunchtime nonsense. It is beautiful here in Chicago, clear skies, 75 degrees, just a gorgeous day. So I'm sure a lot of people want to hit the golf course early. So a lot of volume is likely to drop off, as it often does on a Friday, but we're likely to see something into the last hour. So take your time. There are several opportunities that are likely to show up during the day, just like they do every day. Don't commit to one thing, get stubborn, and then basically forbid yourself or deny yourself the right to continue to trade with a clear level-headed approach into the end of the session. Finally, don't, again, it is Friday, not the best day to go home with a hole in your pocket, having damaged your account, your emotional capital, and having something to dwell on all weekend. I would rather lose financial capital than emotional capital. Emotional capital, your confidence in yourself and your ability to actually follow your plan and trade properly is extremely hard to regain. It's a question of trust. It's like losing someone's trust. It's like being betrayed and having to regain trust. It takes a long time. I work with traders day in, day out. Um, we've had several who joined stage five, took off, did performed very well, and then got too far ahead of themselves, started to take too big a position, and basically took back what they've made this year and have done nothing since then. Have just struggled and have had to go back and rebuild their plan and rebuild their confidence. It's just a terrible thing to go through. We watch our risk every day. That's what I do here. Uh, but to take a massive hit because you committed to a trade that did not work and you tried to defend your opinion of the market is not trading, it's gambling. I know it's the same message over and over for most of you guys, but it's important for you to know that it's something that's innate in us and it's something that we have to be aware of and mindful of as we trade. Good luck. I'll catch you on Monday. Stage 5 traders, we have our webinar at noon. Pop quiz and questions as usual. Take care.